Test. Okay. All right. It's the 29th of Jan. It's a Wednesday, and we've got about 30 minutes to the NY Open. Going to get to the charts in a second. Yeah, I think we're all good. Okay, perfect. All right, just so I can hear clearly. All right. Yeah, let's take a look at the calendar before we start. Okay, so today is an important day. We've got the federal funds rate. They're expecting to keep the rates the same. I think they will. I don't think they're going to make any changes today. This is the first rate decision after Trump is in office, so I don't think they're going to make any changes today. But the press conference 30 minutes after the funds rate, the press conference is going to be very important. It's going to give direction for this week and probably even next week, right? So that's very important. I'm not too concerned about this event, but what comes after 30 minutes after, that's going to be very important. I might just get on the charts just to watch what happens. Probably not be trading, but I might just get on the charts around that time. It's pretty late for me, but I'll probably get on the charts just to see what's happening at that time. Other than that, there is nothing today. That's the only news event. Wednesday there is nothing apart from that. According to my time zone, there is nothing, right? So it's the latter half of the NY session that might have volume. It's not. It might. We might not see much volume in the NY session today, right? We might not. All right, on the daily, what's happened? As I said, we've been very bullish. So on the weekly and the daily, we're very bullish. On the weekly candle closed strong bullish candle above 2750. I said this on Monday that we're very likely to drop down, grab liquidity before we head up higher. And that's exactly what's happening. Price pushed down. It pushed down to these wicks. We spoke about this on Monday. Watch if you want to just listen to only the stream, the analysis of this of each stream. You can watch just the first 30 minutes of any stream. The first 30 minutes is when I do the prep work or when I analyze the chart. So if you watch Monday, the first 30 minutes of Monday or the first 20 minutes of Monday, you will see that I said price will react to these wicks. We had wicks all along here, and that's exactly what price did. There was daily, I think, support around that area. I don't use daily support. I have weekly support resistance levels, but price reacted to those wicks. And then yesterday, the daily candle closed again above 2750. So it looks like we're pushing up, right? Now, today, I'm not going to be taking any trades today because very likely that we're at a range. It's a very bad idea to take any trades during the New York session or the New York Stock Exchange session today, right? Just today, because the volume is going to be the latter half of the New York session. That's when volume is going to come in. That is when you have the federal funds rate and the FOMC meeting 30 minutes after that, right? That's probably when volume is going to come in. If we are headed, pay attention, please pay attention to this. If price is to head up, watch out for that liquidity grab. Price will pull back to an area to grab enough liquidity to push up, right? If it is to head up, okay? So, but we won't know that until we see the next couple of 4-hour candles close, right? So there is one that will close in about 2.5 hours, and there's another one that will close 4 hours after that. That's probably when you will have a better idea when you see the 4-hour candles, the higher time frames. If you start making lower lows and lower highs, that means we're heading down on the 4-hour time frame. If we are going to continue up, then we'll start making higher highs and higher lows. That means we're continuing up, right? Based off of the 4-hour time frame. Okay, let's get to our trading chart. And before we draw the zones, I always do a recap. Okay, so let's see what happened yesterday. Now I have this because I did take a trade. I'll explain all of that later. But what happened? Price never came back after it broke above the Asian, after it closed above the Asian high and the London high. The Asian high and the London high were at the almost at the same level, just probably about a pip difference between the two. So it doesn't matter. It's at the same level. So we had a 30-minute close above pre-NY session, the 30-minute close above without a closed above the Asian high and the London high with no top wick. I was anticipating price to pull down a bit, but it didn't. It didn't retrace or it didn't pull back. It just continued up, right? So I couldn't take any buys here. This is where I wanted to get in on the buy somewhere here. I couldn't. Price just pushed up because I need to wait for my setup. Okay, and my entry model, what I used to enter is on a M15 time frame. I use a fib to enter, right? So that happened much later. So I said if price breaks this liquidity candle, then we're heading to this liquidity candle, right? And I said if we watch the first 30 minutes, that was all explained. If you watch yesterday's stream, the first 30 minutes, all of it was very clearly explained. Price will push up another 60, 70 pips, I said, if you break this high. And that's exactly what we did. We pushed up about 66, 67 pips, and then we started to drop, right? So let's get into that. Let's look closely at that on the 15-minute time frame. So what happened was, let me zoom in here. So I had a one M15 candle. There was one M15 candle that broke a low. That's not enough. I need to see two. So this one broke a low, and then that was after M30 support was created. So we created M30 support up here again. We created M30 support, so which means we are heading higher. There was no opportunity for sells at all because there was no proper rejection on the 30-minute time frame, no clear resistance form, right? And I explained that again. If you watch the first, I think 30 minutes of the stream, it's very clear. I said look for when I say M30 support or resistance, look for this is what you want to see, M30 support form like this, right? Or M30 resistance form like this, or like this, or like this, or M30 support form like this, right? I explained all of these in detail. So I said if you see a doji, right, that's not, if you see a bearish doji, that is not M30 resistance form. It is M30 resistance, but it's not enough enough information to take a trade to base your entry off of, right? So that's exactly what happened here. We had M30 resistance form, but again, very small body, a lot of wick, very close to a doji. This one again, equal wick on either side, and a very small body. Again, same equal wick on either side, small body. Again, doji here. So there is no reason to look for sells at all. They're pushing up, right? So if you go to the 15-minute, this candle broke this M15 low. This is one. Then we didn't have a low break, and then this one broke this low. So I draw my fib from here to here. Price pulled back. It did not come back here. I know because price was very bullish. So I did take a trade at these wicks right here. Stop loss was under that. That was about a 65, 64, 65 pip stop loss, and I took it out right at this liquidity candle here, right? So that was about a 72, probably a little over 1 hour trade, right? But that's the kind of I would have been comfortable if this had happened earlier, because then they would have had we would have had enough liquidity to head higher. So if these lows were broken somewhere here, then I could have taken this trade all the way up here. Instead of taking 70 pips, it could have been 180 or 200 pip and have a much higher RR on that trade, right? But unfortunately, that my setup played out later in the move. which was here. I did still take the trade, and we did get there eventually, right? And then I said for those looking to take sells, wait for M30 resistance to form, clear M30 resistance. So here, from after touch of the liquidity candle, this didn't touch. Here, Asian session. So when I did the analysis yesterday, I said these setups that I draw are good for, you know, the latter half of the NY session, Asian session, and even the London session, right? The next day is London session, Asian and London session, right? And that's exactly what happened here. M30 resistance form here from the liquidity candle. So your safer stop loss would be always above the liquidity candle, which is there around 2771. That's your safer stop loss. Your aggressive stop loss would be above the M30 high, and then wait for the retracement and then take the trade coming down, and we are still pushing down, right? So that would have been your safer stop loss, about 57, 58 pips, and we are almost at around 2 RR already. Okay. um, okay, so let's get rid of all of these and start the process again. Yeah. Okay. All right. Okay. So price never came here to these areas that we had marked. This was, I readjusted the demand zone. It was drawn here, and then we adjusted after this 4-hour candle closed. I moved it up here, right? So price hasn't come there yet. So I'm going to just extend that to the right. Start with that. There's a liquidity candle there. We're going to take a relook at that liquidity candle. Yeah, I'm going to delete that for now. And we're going to relook at the liquidity candle because we have new information now. We have another candle that is inside that. So we're going to take a look at that zone, right? The price hasn't come to this zone and to that liquidity candle. So I'm going to keep that, extend that to the right. Yeah. And 400, yeah. I'm going to extend all of these to the right because today is news. And if price intends going up, it could push straight through to grab liquidity from one of these zones and then push up, right? So it'll grab liquidity from one of these areas. I always put this chart up from one of these areas, right? Okay. I think that's, yeah, about 600 pips to the downside. That's good enough, I think. Let's extend this as well. Okay. Perfect. Now again, I'm not looking to take any trades today. It's safe to say that we will push down, but we're coming to 2750 and it's just 50, 60 pips away. It's not worth it because we might just bounce off their range, we might close below, close back above. So it's really not worth it. If this wasn't there, this barrier wasn't there, I may have taken look for sells to come down because we have clean space to the left. But we've also closed a very small bearish candle here. signaling a continuation. So we may have a pull, a push, a retracement, and then continue down, but it's not worth it. The range is not worth it, at least for me, right? But you can take this trade if you are trading the New York session, and you want to take a trade coming down. It's possible. Look at the lower time frames, and you can see where to enter. But price should be heading towards 2750, at least on the 4-hour time frame. That's what it seems like. We're going to go down and have a take a closer look at the zones. Okay, right, now we had this zone drawn yesterday, a drop, 2 basin candles and a drop, but price has come deep into it, and we have a new supply here. We have a rally, 2 basin candles and a drop here. So what I'm going to do is I'm going to extend this. I'm going to cover both those zones, right? Because that zone is there. I'm not going to. Yeah, 1 second. Let's just see how much is the original zone. It's 176 pips. Yeah, we've come more than 50% of the way into it. All right, we've come more than 50% of the way into it. So it's better to draw two. We'll talk about this. I'll talk in details about this zone. Okay. Right. So we have this was the original zone here, from here all the way up there. Price has come more than 50% of the way into it and has formed new supply. Now, this supply is a reaction to this original supply, right? This is the waterfall effect, the drop, base, and the drop. And price has now, this is the source, and this is a supply zone that is a reaction to it, right? So price has come more than 50% of the way into it. So if it comes back the second time, maybe it might not hold, maybe it might go right through, right? Because the liquidity of that level is possibly taken out. I won't say that it's taken out for sure, but it's crossed the 50% mark, right? So that zone was 175 pips, the zone that we drew yesterday, and we've come 115 pips into it, right? So almost 2/3 of the way into it. Okay, let's put the numbers here. 218 620. Okay. Yeah, more than 2/3 of the way into it. Okay, let's extend this to the right. That's a supply zone that has just been touched the previous on Monday. Yeah, we touched this zone, rally, 5 basin candles and a drop, and price came and touched that zone. Okay, and then we have this last zone that has been exhausted already. Okay, I'll just quickly show that here. So that was the zone. The zone started all the way up here, down here, sorry, 125 pip zone. Price has come all the way up to here. So that's about 38 pips, 39 pips left of that zone. So the zone has been exhausted. So if we come back there, then that little bit is not going to hold price, push price down again. We're going to break right through it, head to 2800, right? So if price is heading up today, because we are bullish at the moment on the weekly and the daily, the high time frames are bullish. We could possibly head to 2800 today or tomorrow. That's possible, right? That's a fairly large move, and that's the reason that I'm going to probably come back during the FOMC press conference and have a listen to um, what they have to say about the US dollar, and watch on technical levels, see how that information translates to these technical levels that I'm drawing. Okay. Um, all right. So we have a 4-hour demand there. This is still a high liquidity zone. Price hasn't tapped it yet. Let's take a look at this area near 2750 on the 1 hour, right? When there's a break like this, there's very likely a zone there on the 1 hour, right? Yeah, there is a zone there. There is no bottom wick here, so price is heading below, should head below this candle here. That is, yeah, we should be heading below that candle. This candle right here. It should be coming down. Yeah, that's another 80 pip drop, 85 pip drop left, so we should come down. If you want to take sells, you can. There's nothing wrong in taking sells in evoke session. I'm just not. I'm just going to do the analysis today, and then probably end the stream a little early, and then come back around the FOMC meeting, the FOMC press conference, and take a look at the chart, take a look at these zones that I'm drawing. So just keep in mind these zones that I'm drawing are going to be valid, right, for today and maybe even tomorrow, easily, right? All the zones, every day that I draw. That's why I cover such a wide area on the chart, because the zones are valid. So we've covered about 767, 70 pips to the downside and about 340 pips to the upside. Unfortunately, there is no price action above this to the left, so we have no idea what price is going to do. All we have is 2800, which is a liquidity level. The price can it's like these liquidity levels are like magnets, right? They draw price to them. So that's possibly, if we are heading up, that's if we head above this. Let's look at if there's a liquidity candle in this, but if it breaks whatever liquidity candle is in this, then we're heading all the way up to 800, right? So we're going to take a look at this zone right here, this zone. Okay, there's a 4-hour zone there, 130 pip zone there. We're going to take a look at that zone, very important for today, that zone, because if price breaks the liquidity candle high in that zone, we're heading to 2800. Okay. Yeah, that's the closest supply, that's the closest demand. Let's take a look at 30 minute. There's nothing on the 30 minute here. Sorry, it's not 30 minutes. Yeah, there's nothing on the 30 minute here. I thought that would be like a rally based rally. There's nothing. There's just this candle with no wick. So price is coming below this, right? It will break this below this low. It will come down, and then let's see where it's going to come to. We'll do that soon in a bit. Okay, so that's a high liquidity zone, right? Next step. So we've drawn our 4 supply demand levels. Next thing to do is I'm going to get rid of this just to even this, right? Let's get rid of all of that just to have a cleaner chart. Now we have this demand level that we had drawn yesterday. Price hasn't come to it yet. That's a high liquidity zone, and we have this new supply level here, and we have this yesterday's whatever's left of that supply level. Now, as I said, price has come deep into it. I no longer consider this a high liquidity zone, but weekly resistance runs right through it, right? Because of that, I still have to pay attention to that zone. So that is why I'm going to label it as a high liquidity zone, right? Because weekly resistance runs right through, and that's very important. These 5 areas, to me, these 5 areas are very important on a price chart, right? Weekly SR. So that's one of them. Then the BRNs, and then obviously the high liquidity candles inside the supply demand zones, right? And the EMAs. So that weekly resistance, which you see here, 2787. Sorry. That is not weekly resistance. Oof, I had a mistake. 2750, 2787. 2750. This is a line that I had drawn yesterday. 275. 27. Sorry, my bad. 2750. 2787. Okay, sorry. There is no weekly resistance there. So that zone is not important. Right? That zone is not important because price, as I said, this was 175 pip zone. Price has come more than 2/3 of the way into it. Right? We've come 117 pips into it. That's more than 50% of the mark. We've crossed, so that whatever's left of that zone, I don't consider high liquidity zone. It might stop price, but I don't consider it to be a high liquidity zone. The one above is, right, because we just tapped it by by a few pips, 4-5 pips. We tapped it and we pushed, so that is still a high liquidity zone. This one isn't. And we have new supply here that we formed rally, 2 basin candles and a drop. Sorry, this is my bad. 2787, 2715, 2673, 2673, yeah, 2633. Yeah, we're good now. Let's just quickly save this. Okay, perfect. Okay, so let's take a look at these zones now because I deleted the high liquidity candles inside this. So let's re-look at these zones. Now we have this readjusted demand zone here. It was drawn roughly about here yesterday to this. It was a 100 pip zone. Now I've extended it to cover this candle because this is a basin candle now after this candle formed. Okay, so now we have a fairly larger zone, 125 pip zone. Let's take a look at that. If there is a area there that can, if there's a candle there that can push price up. Okay, let's look on the 1 hour first. There is this candle here, 72 pip candle, 49, 57. Okay. Let's go down to the 30-minute. Still the same candle. Still a 70 pip candle. 55. Let's go down to the 15-minute. $49 pips. $44. Yeah, there might be 2 liquidity candles in this. Zone is fairly large. 127 pips. 57. No, 50. That's 50. That's 57. 44. It's tricky. I'm going to use this candle. 189378. 478. Okay. We're going to use this liquidity candle. Even though on the 15-minute this candle is larger. 56. Still 56. I'm going to use this. Yeah, because this is a bullish engulfing candle and also price failed to get in here. All right. Okay. Okay. There's one other thing that I didn't do. I didn't check if this is a high liquidity zone or not. On the 4-hour, it isn't, but we have to look at the 1-hour as well. We have demand here, rally, base, rally. On the 30-minute, it should be clearer. That right there. Yeah, even on the 1-hour, it's clear, and price did break it, and we came up and we broke this demand as well. So that is a high liquidity zone, but it's been tapped already. Okay. Yeah, okay. Right. So that's a liquidity candle there on the 30-minute. We have a liquidity level here, 2750. It should, if price needs to grab liquidity to head, it needs to grab a lot of liquidity, we should break through this, right? And we should break through this because this candle with no wick is right here. So price should break below 2750. Just look at the 15-minute time frame. Yeah, we're probably heading down, but I'm not going to take any sells. This is not, today is not, the first half of the NY session is no trading for me, strictly no trading. I'm going to have a look at the chart during FOMC and then look to take trades tomorrow NY session, because that's when we're going to get direction after FOMC. So until then, it's not doing anything, right? Okay, anyway, let's take a look at the zone here. We had a liquidity candle here, 26 pips. Price grab liquidity from it. Let's go 30-minute time frame. Yeah, this candle right here, 26 pips. Also 26 pips. 34 pips. Let's go down to the 15. 24. 31. 37. Yeah, this candle right here. Yeah. 38. Yeah. So price will very likely come and tap this if it is to go down, because it hasn't. It hasn't tapped this liquidity candle. We've created it, gone through it, and come straight down. We might come up for a tap before we go down again.